From thetraderguy.com, this is the play of the day. Going into the 11th of February, I'm looking at the Aussie dollar pair. This is one that has been absolutely hammered. The US dollar in general is outshining other currencies. If you're looking to buy the Aussie down here, you're probably going to regret that decision. Although we never really know what's going to happen ahead of time. We only know what the odds are in when they're in our favor, and we're clearly in a downtrend here. Go ahead and zoom out. There's really no argument about it, and there is an area here right around 67.67 that has offered support. But when I look at the monthly chart, look at how bad January truly was. When I look at the weekly chart, the previous week was a very negative candlestick. They tried to rally it, just couldn't. Remember, Australia is very sensitive to the Chinese economy, which of course has a whole host of issues. So when I zoom way out on this, I'm going to go ahead and look for selling opportunities. Now, for me, the most obvious spot is 67. So if we are to return to that area, I'd be a seller. However, that's assuming we can even get there. So 67 is basically right there. It extends to about 67.20 or so. So on a touch of 67, I'm a seller. If we don't reach 67, I'm also a seller, somewhere between here and there. The market here, I think you need to give up to this level here at 67.25 for a stop loss. So really, all you're trying to do is maximize your entry. So then the question is, where can we go? Well, I think the bottom is obviously a target, but I anticipate if we get back down there, it's probably going to give that up. 4-hour chart, you can see, looks pretty bad. Now, when you're this far out and you're this far bearish, you need to really start looking to longer term charts as to where we can go. So as I zoom in here, you can see the monthly chart. I mean, we're right at the bottom of a multi-monthly area. It does look like we're going to try to break down. So then you look at this area here. This is the financial crisis. That's how low this is. So down here, we're talking as low as 63 is where we could go. So keeping that in mind, you could be able to short in this area and aim for as low as 63. I actually prefer 64. There's no need to be a hero. But you could be talking as much as 300 pips. Clearly, things can change, and this market could suddenly turn around based upon good news. So once we make a fresh new low at 66.60, I'd be a bit hesitant to risk too much. I might start dragging my stop loss up. So again, I want to buy at 67 if I get the opportunity. I want to have a stop loss, or I will have a stop loss at 67.25 right here. On a breakdown to a fresh new low, you can start dragging that stop loss down, perhaps little chunks at a time. And longer term, we could be looking to move to 63, but I think 64, or even if you want to get out of the market quicker, 65, either one of those would work. The risk to reward ratio is certainly there. But I don't see anything good coming out of either Australia or China. The economic numbers do not look good, although Chinese CPI came out a little better than anticipated. It also didn't include part of the panic. The coronavirus really didn't start kicking it until about the middle of January from what we know of. So that's a little bit of a skewed number. Nonetheless, no interest in buying this pair. The U.S. dollar continues to outperform other currencies, as it should, with the U.S. economy outperforming other economies. Thanks for watching. Don't forget to subscribe. I'll be back tomorrow with another one.